Well, we've got a super exciting story to share today as well,
I
don't we?
can't wait to share it. We were just like going over the numbers this morning, and oh my god, they're crazy.
We've helped so many clients over the last 12 months, and the clients that we helped 12 months ago, their properties are now coming up to handover. This is the time now where they can actually see those rewards come through, where they can actually have that rental income coming in, and numbers that have come through on some of our clients' purchases have been incredible, haven't they?
Brilliant.
So much exciting things happening back here at RAF as well. We've launched our Melbourne division as of today. So we've got Billy on the ground down there in Melbourne, and what we're able now to offer our clients in Melbourne is strategy sessions where we can actually sit down face to face and be able to map out exactly what they want to achieve financially, what that needs to look like, how to pay the home loan off quicker, how to get that tax money back in your pocket, and ultimately how to achieve financial freedom, putting plans in place, strategies in place, and helping our clients execute on those as well. But how exciting, hey?
It's so exciting.
So Melbourne, we've always helped our Melbourne clients, but we've never had someone on the ground able to see them face to face. We've always had to do it over Zoom and telephone, which has worked amazingly, but we're very, very, very pleased to launch that as well.
And we hope we can introduce you guys to Billy across the socials in the next number of weeks.
Yeah, we're going to get him online, and he doesn't know about it yet, but he'll be here live with us, so that's awesome. All right, guys. Success story, we were talking about a client who's coming up to handover at the moment, and we were running numbers. And what this client had invested in around about, mid last year was a dual occupancy property. So you guys have probably heard us talking about them. It's what looks like a house, but you get two income streams coming out of them, and they're extremely popular.
They're hot.
They're hot property.
Yeah.
That our savvy investors, they jumped on them last year, are doing very, very well. But what does that mean? What does it look like? And we're going to share the numbers. Because when you invest, it's all about the numbers.
That's it. So this property, it looks like it's going to be bringing in that client $700 a week. So
$700 a week in income. So when you're investing, it's not about emotions. It's always about the numbers. And you need to treat your investment as if it's a business.
Yeah.
How much money is the property going to generate me? How much am I going to be left with? How's this property going to be a vehicle to help me achieve my financial goals?
Yeah.
So this one, $700 a week.
That averages about $36K a year.
$36,000 a year. So we've got $36,000 coming in our pocket from the property every year.
Yeah.
Awesome. Now we're going to have costs.
Yeah, so you're looking at property management fees. Let's give it about $3,000.
$3,000, so that's someone that can look after the property management. Yep.
So you've also got insurance. That's about $2,000 a year.
$2,000
for a dual occupancy.
Yep. Okay.
Total interest, knock off about $20,000.
$20,000. And on this example, we're basing the interest costs on 100% of the loan. So this client paid $515,000 for the property. And that was based upon us using equity to fund it. Therefore, the clients put zero of their own money. So we're borrowing 100%. So $20,000 in interest. That's probably your biggest outgoing, isn't it, when you're an investor?
Big one.
All right.
You've
What
also
else?
got like council and water rates.
Council and
that's
water.
about $2K.
About $2,000 in rates.
Yeah.
Perfect.
Maintenance is about $1,000.
About $1,000 in maintenance.
Generally, though, you don't really see a lot of that in the early years of
No.
property.
This strategy that we've done, land and build, really, really good because we're covered by warranties and the maintenance is quite low at the start. But
What
let's
about
put a
others?
provision. We'll probably have about another $1,000 in costs.
Yeah,
Okay.
that looks about right.
That just allows for letting fees for the property manager, loan account fees. So that allows a nice little buffer there. So what's that in total outgoings, Eliza?
$29,000.
29 grand. So now, if you've got $36,000 coming in and you've got 29 coming out,
Like 7.
that's awesome.
Yeah, 7,000.
That's passive income from day one coming into your pocket. What was that property worth in the current market? How much has it gone up,
It's
Eliza?
gone up about $150K.
$150,000 uplift in less than 12 months. So this client's made 150 grand and a property that's going to put $7,000 a year in their pocket from day one. But we're not finished, are we?
There's always more.
Alright, let's go. So out of that, we've made 7.
Yeah.
There's this other really cool
Yep. It's
cost.
Tax depreciation.
Tax depreciation. Alright, so we can claim an expense here that the client doesn't actually have to pay. So you as an investor don't actually have to pay that expense, but the ATO lets us claim it. On a dual living, you get a surveyor through, we organise that for our clients, but approximately, what would you say we get?
About 8,000.
Alright, so we claim, we'd be left with about 8, we claim about 15,000 in depreciation, giving us $8,000 as a loss. Now, a lot of people sort of go, whoa, what's happened there? We've got a property here, and a lot of people get confused with this concept as well. The property is paying $7,000 a year.
Yeah.
So it's cash flow positive, $7,000 a year. Then we get to claim a depreciation on the building going down, even though you don't pay that out, which allows us to put the property into a loss. So while the property is running at an $8,000 loss, but still paying you $7,000 a year to own it, the ATO lets us claim a tax deduction because the property's run at a loss. Now that loss there, if you're paying 30%, let's say, as a tax rate, you'd be able to get
$2,400.
$2,400 back in your pocket from the ATO. So the property didn't make us 7 anymore. What did it make us?
That's $9,400.
$9,400. Now tell me how cool that is.
That's pretty epic.
So the property has gone up $150,000. We've managed to secure a cash flow positive passive income from day one. We've managed to also get the government to tip in a couple $1,000, boosting our cash flow even more. It's awesome.
Pretty epic.
It's a triple whammy of what you want as a property investor. How do I get a property that's going to give me good uplift, pay me from day one, and how do I get the government to contribute as well and get those taxes reduced? Now, what's super cool is we've gone out, we've invested, we've had uplift, we've created cash flow. What do we do with that money now? Now, there's a few things you can do, but if you were to park that into an offset account, now offset account sits against your mortgage and your home loan and helps you, whatever's sitting in there, not have your home loan having to pay interest on it. So whatever's sitting in that offset account becomes, offset against the home loan when it comes to how much interest you pay. Now, if you're putting that on your offset account against your home loan of, let's say, $300,000, and you're paying around 3% on the mortgage, what you'll find is it was going to save how much money?
$98,000.
98 grand you can save off your home loan over a 30-year loan term.
Yeah, so that slashes like 14 years off your...
Wow! How good is that? So you're saving 98 grand on your home loan and you're paying it off in nearly half the amount of time as opposed to having your home paid off over 30 years.
It's working smarter.
Wow, so we're getting the government to give some of our tax back, we're able to pay our home loan off in nearly half the amount of time, we've made money and cash flow from our investment, we've had uplift. That is what we're looking for when we get out there and invest. Now imagine if we didn't get one of those, but we got several of those, how much that would help set us up, how much quicker we could knock our home loan off.
How much quicker you can retire.
Yeah, the passive income that you can generate from day one, the uplift, the accumulation strategy, backing these property is incredible to set yourself up. These are the results that you can get in the current market. It's incredible. These are the results we're helping everyday investors across the country at the moment secure for themselves. And it's super, super exciting. We had to share that with you. We're running the numbers. We get excited here when our clients succeed like this, when we're able to help them, set themselves up, pay that home loan off quicker, because that's what it's all about. It's about being able to work smarter, having our equity and our money working smarter for us to set us up for our financial future.
We love that.
What else has been happening, Liza, in other news?
I mean, there's still so many opportunities for first home buyers at the moment, and the media is pretty discouraging with some of the news articles.
They can be. They don't know what's going on.
No.
They've got like white power. One day the media's doom and gloom, and the next day it's optimistic.
Yeah.
So the one thing we learn, and we always encourage others, don't tune into the news. I haven't watched the news in I don't know how long. But that's just the media for you. But
yeah, I mean, like first home buyers, there's still opportunities for them to get into the market with as little as a 5% deposit.
Huge.
It's very important though that you do consult a mortgage broker or a finance specialist because they can help determine which lenders are offering that incentive.
Yeah, because what we saw just last week was more placements with the first home loan deposit scheme, which allows as a first home buyer not having to pay the lender's mortgage insurance, which is huge as well, because we're talking about, you know, potential savings there, depending on the purchase price of somewhere around that 15,000, could be 10, could be 15, could be 20, depending what you're spending, that the government's able to guarantee for you so you don't have to pay lender's mortgage insurance. So essentially what it means is less money into the market to be able to get in and buy your first home if you are a first home buyer, which is awesome. There's still grants out there. If you're in Queensland, it's $15,000. If you're in Melbourne, it's 10 grand. Sydney, it's 10 grand. Some regional areas, it's even up to 20. So as a first home buyer, pick up the grants. You look at the first home loan deposit scheme placements where you don't have the LMI. There's also exemptions and concessions when it comes to stamp duty. And all of that adds up to be anywhere around that 30 to 50 grand in your pocket as a first home buyer that's out there that you can capture to help you get into your first home. And it depends where you're based, what the property's purchase prices are, but we help clients navigate all of that and be able to help them secure that as well. But it's all happening, isn't it? Investors are winning, the opportunities are extremely good out there for first home buyers, for really anyone out there that really wants to get ahead financially and set themselves up no matter where you're at. But that's us, isn't it?
Yeah, that's us for this Monday. If you have any questions or if you want to reach out, please don't be afraid to. So yeah, we can give us a call on 1300 130 932.
Beautiful. We'd love to be able to help you with all your finance and property goals. But guys, have an awesome, fantastic Monday. And we'll be back live next Monday. See everyone soon. Cheers.